Let's begin with the very first golden rule: mastering your mind before you even think of mastering the market. You see, most people assume trading is about charts, patterns, and price movements. And while those elements have their place, they are never the real battleground. The real battlefield is within you. It's in the whispers of fear when you're about to enter a trade, in the rush of excitement, when the numbers momentarily go in your favor, and in the sinking weight of regret when the market turns against you. If you can't control those voices, if you can't stand steady in the storm of your own emotions, no strategy, no system, no technical skill will save you. You think about it. How many traders have blown up their accounts not because they didn't know what they were doing, technically, but because they couldn't control what was happening inside them? The temptation to move a stop loss just this once, the urge to double down because you're desperate to win back what you lost, the anxiety of missing out on a move that everyone else seems to be catching. These aren't trading problems. These are psychological traps, and unless you learn to master yourself, you'll fall into them again and again. The truth is, fear and greed are the two primal forces that drive markets. But more importantly, they drive individuals within the markets. When you feel fear, you hesitate, you exit too early, or you avoid taking the trade altogether, watching opportunities slip through your hands. When you feel greed, you over-leverage, you ignore your rules. You stay in a winning trade long after your plan says to exit, convinced the good times will never end. Both emotions will eat away at your consistency, and without consistency, there is no success. This is why trading at its core is less about predicting the market and more about predicting yourself. Can you remain calm when the screen flashes red? Can you sit still when your mind screams for action? Can you trust the process when every fiber of your being wants to override the plan? These are the real questions that define your longevity in trading. The market isn't cruel or kind. It's neutral. It doesn't care about you, your goals, or your dreams. It simply reflects back to you the level of mastery you have over your own psychology. Now, here's where most traders get it wrong. They look outward for solutions, new indicators, new strategies, new gurus to follow, when the real solution has always been inward. Your state of mind is the foundation. You can't build a skyscraper on shaky ground, and you can't build sustainable trading success on an unstable emotional state. Before you can think of scaling your account, you need to scale your discipline. Before you can expect profits, you need to expect patience from yourself. And consider this: when you enter a trade, your brain doesn't just see numbers. It sees survival. It sees risk and reward through the same lens. Our ancestors saw danger and safety. This is why emotions run so high, because your nervous system treats financial loss as a form of threat. But here's the empowering part. Once you understand that this is how the mind works, you can begin to detach. You can train yourself to see the market not as a predator hunting you down, but as a mirror showing you your inner state. Each trade becomes less about making money and more about testing your ability to remain centered. The traders who succeed long-term aren't the ones who know the most or predict the best. They are the ones who can regulate themselves when everything in the market seems chaotic. They cultivate presence. They recognize when fear is trying to speak and when greed is whispering promises. And they make a conscious choice not to let those emotions dictate their actions. That's mastery, not of the market, but of the self. So when I tell you the first golden rule is mastering your mind before the market, understand it's not just a suggestion. It's a necessity, because without mental clarity, every chart you study, every strategy you learn, every dollar you invest will be at the mercy of your impulses. The difference between those who rise and those who fall isn't the market they trade. It's the mind they bring into it. And if there's one truth I want you to carry with you, it's this: you will never outperform your psychology. Until you master yourself, the market will master you. If mastering your mind is the first golden rule, then managing your risk is the second. And I want you to really let this sink in, because this is where most traders completely misunderstand what trading is all about. You see, anyone can make money in the market once. Anyone can catch a lucky move, stumble into a breakout, or ride a sudden trend and feel like a genius. But wealth isn't built on luck. Wealth is built on preservation, on protecting what you already have, so it can grow steadily over time. That's why I say risk management isn't just a technical aspect of trading. It is wealth management. Without it, success is nothing more than a fleeting illusion. Let me put it bluntly: the market rewards survival. Your job as a trader is not to win every trade, not to be right all the time, but to stay in the game long enough for your edge to play out. Even the best traders in the world, those who manage billions, are wrong a significant percentage of the time. The difference between them and the average retail trader is that when they're wrong, it doesn't destroy them. Their losses are controlled, calculated, and expected. They never risk their entire future on one idea. They never tie their identity to one trade. And because of that, they're still standing year after year, decade after decade. Now ask yourself, why do most people fail? Because they flip this equation upside down. They risk big on the hope of a quick win, and when it doesn't go their way, they're wiped out. Or worse, they hold on in desperation, turning a small loss into a catastrophic one. It's not that they lack intelligence, it's that they lack respect for risk. They treat the market as a slot machine instead of a business, and in doing so, they sabotage their future. Risk management begins with a mindset shift. You must see every dollar in your account as a soldier in your army. Your goal is not to throw them recklessly into battle, hoping one survives. Your goal is to protect them, to deploy them strategically, to ensure they live to fight another day. You don't win a war by charging blindly. You win by choosing your battles carefully, knowing when to advance and when to retreat. In trading, it's no different. This is why position sizing matters. It's why stop losses exist. It's why you never, ever place your entire faith or your entire capital on a single outcome. Because no matter how good your analysis is, no matter how strong your conviction feels, the market owes you nothing. You must always prepare for the scenario where you are wrong, and not only prepare for it, embrace it. Accept it as a natural part of the process. Losses are not the enemy. Uncontrolled losses are. Think of it this way. If you risk bivengery of your account per trade, you could lose 10 trades in a row and still have bivengersors of your capital intact. You could recover, recalibrate, and continue. But if you risk bivengerarsters on one trade, 2 losses could cripple you beyond repair. Trading is a probabilities game, and probabilities only work in your favor if you give them enough time. Risk management is what buys you that time. And there's another dimension to this that people often overlook. Risk management isn't just about numbers, it's about emotions. When you risk too much, you're no longer trading the market, you're trading your fears. Every tick against you feels like a personal attack. Every hesitation feels unbearable. Your mind spirals, and suddenly you're not following your strategy. You're reacting, panicking, making decisions from desperation. But when your risk is small, when you know you can absorb the loss, you trade from a place of clarity. You can breathe, you can think, and that's when you make sound decisions. So understand this. Controlling your risk is not just about protecting your money, it's about protecting your state of mind. It's about giving yourself the space to stay calm, to stick to your plan, to approach the market as a strategist instead of a gambler. That's why I say risk management is wealth management, Because wealth isn't built in one day. It's built day after day, trade after trade, with patience and protection. In the end, success in trading is less about how much you can gain and more about how much you refuse to lose. Because if you protect the downside, the upside takes care of itself. And the trader who learns to defend their capital is the trader who will always have the capital to grow. And so remember this, it's not the size of your wins that define your future. It's the size of the losses you're willing to accept. Manage your risk and you manage your wealth. If mastering your mind is the first golden rule and managing your risk is the second, then the third is this: strategy over speculation. This is where so many traders get lost because speculation is seductive. It gives the illusion of control. It feeds the fantasy that maybe, just maybe, you can guess what the market will do next and strike it rich overnight. But let's be very clear, guessing is not trading. Hope is not a strategy. And in the world of markets, hope is the fastest way to bankruptcy. You see, when you speculate, you're putting your future in the hands of chance. It's like flipping a coin and convincing yourself that you're skilled at predicting whether it lands heads or tails. Sure, you might get it right a few times, and those wins can feel intoxicating. But eventually, randomness will expose you. Luck always runs out. What doesn't run out, what sustains the great traders year after year, is strategy. A strategy is not a hunch. It's not a lucky guess. A strategy is a well-defined system built on logic, testing, and consistency. It's a framework that tells you not only when to enter a trade, but when to exit, how much to risk, and how to respond if things go against you. It's a plan designed to remove as much emotion and uncertainty as possible from your decision-making. Without a strategy, you're drifting in the ocean without a compass. With a strategy, you have direction, structure, and discipline. The problem is, most traders don't want to put in the work required to build or follow a strategy. They chase tips, rumors, social media posts, and so-called hot stocks. They confuse noise for knowledge, and in doing so, they become reactive instead of proactive. They let the market dictate their behavior instead of letting their plan guide them. That is speculation at its core, impulsive, emotional, and short-lived. Now, let's take a moment to reflect on why strategy is so powerful. A strategy doesn't guarantee profits on every trade. Nothing does. What it does guarantee is consistency. And consistency is the soil in which success grows. When you have a strategy, you know what to do in different scenarios. You know when to sit on your hands and wait. You know when to cut a trade and move on. You know when to press your advantage. A strategy gives you rules, and those rules free you from chaos. You think about professional athletes. They don't step onto the field hoping luck will carry them to victory. They train with systems, plays, and repeatable processes. They don't improvise everything. They execute patterns they've practiced thousands of times. Trading is no different. Without practice, without a framework, you're gambling. With strategy, you're building skill. And here's the philosophical layer to all of this. Strategy is the antidote to emotional bias. When you follow a plan, you're no longer at the mercy of your impulses. You don't jump in because of fear of missing out. You don't hold on because of denial. You don't chase losses out of desperation. You act according to a system that has been tested, refined, and proven. And the more you trust your strategy, the less you rely on hope. One of the greatest illusions in trading is the idea that the next big win will solve everything. That one perfect trade, that one golden moment. But the truth is, success isn't built in moments. It's built in repetition. It's built by executing a strategy over and over again, letting probabilities work in your favor. If you have no strategy, you have no probabilities, only randomness. So ask yourself, Do you want to gamble or do you want to trade? Because the difference is not subtle, it's life-changing. Gamblers might win today, but traders with strategies win tomorrow, next month, and next year. Gamblers crave excitement. Traders crave consistency, and in the long run, consistency always beats excitement. This is why I say the third golden rule is strategy over speculation. Because speculation might make you feel alive for a moment, but strategy makes you thrive for a lifetime. The market doesn't reward guesses, it rewards discipline. It doesn't care about your hunches, it respects your process. So let me leave you with this. You don't rise in trading because of the trades you take on impulse. You rise because of the strategies you design, trust, and execute with patience. Build your plan, respect your plan, and let the market prove its worth over time. If you choose speculation, you'll always chase. But if you choose strategy, you'll always build. If there is one quality that binds all the great traders together, it is patience. And I don't mean the kind of patience where you simply wait and do nothing. I mean the deeper patience that comes from trusting the process, from allowing time and discipline to do their work, even when your mind is begging you to act. The market, by its very nature, tempts you into restlessness. Every flashing tick, every sudden spike, every drop in price screams at you to make a move. And yet, the ones who succeed long-term are those who resist the noise and wait for their edge to present itself. Patience in trading is not passive. It is a deliberate act of strength. It takes far more discipline to sit on your hands and wait for the right setup than it does to jump impulsively into the market. Most people think trading is about constant activity, as though the more trades you place, the more money you'll make. But the truth is often the opposite. In fact, overtrading, trading for the sake of feeling busy, is one of the greatest destroyers of accounts. You don't need 10 trades a day to win. Sometimes you only need one good trade a week, or one good trade a month. The difference lies in having the patience to wait for that trade, instead of forcing opportunities where there are none. Think about it. The market is infinite. Every single day, there will be moves you miss. There will always be another stock running higher, another chart breaking out, another setup that seems obvious in hindsight. If you live in the mindset of chasing everything, you'll forever be restless, forever distracted, forever scattered. But if you cultivate patience, you stop chasing and start selecting. You stop reacting and start positioning. You recognize that trading isn't about catching every wave. It's about catching the right ones. Now patience isn't just about waiting to enter. It's also about waiting to exit. Many traders sabotage themselves not because they chose the wrong trade, but because they couldn't sit still when the trade was working in their favor. They grab at small profits out of fear, or they cut winners too soon because they lack the patience to let the market pay them what their strategy promised. Patience in holding is just as important as patience in entering. The discipline to sit through the boredom, through the tiny fluctuations, through the moments of doubt. That's where profits are allowed to grow. And there's a deeper lesson here too. Patience is not only about the individual trade, it's about the entire journey. So many people enter trading with the fantasy of becoming rich overnight. They want instant results, instant mastery, instant freedom. And when it doesn't happen in a week or a month or even a year, they give up, declaring that trading doesn't work. But trading is not a lottery ticket. It is a craft. It is a skill. And like any skill, it takes years of refinement. The impatient trader burns out quickly. The patient trader compounds slowly. And over time, the compounding of small, steady gains outpaces the reckless chase for fast money. Patience is also what protects you from emotional self-destruction. When you learn to wait, you stop reacting to every market twitch. You stop forcing trades out of boredom. You stop trying to make the market bend to your will. Instead, you allow it to move, and you align yourself only when the odds are clearly in your favor. In doing so, you protect your capital, your mind, and your future.